to tell you about the new $900 billion COVID-19 stimulus package, the new tax law that we've been waiting for and that was signed into effect December of 2020. The main topics of the stimulus package that I'm going to discuss are the IRS $600 stimulus payments and the Small Business Administration's second round Payroll Protection Forgivable Loan. The stimulus payment is considered an advance on your 220 tax filing as a credit. The payment amount is based on your 2019 income. Everyone is supposed to receive the $600 stimulus payment, including dependents under the age of 17, unless your income is above the phase-outs. The phase-outs start if your income is over $75,000 if filing single, $150,000 if married filing joint, and $112,500 if filing head of household. And you are not a dependent. If your income falls below the phase-out amount, you will get the non-taxable $600 stimulus payment, keeping in mind that the phase-out is calculated at $5 for every $100 over the phase-out amount. If this $600 does not land in your bank account, or you did not receive a debit card in the mail, you can go to irs.gov, get my payment for information on the first and second stimulus payments. If you do not receive one of these payments, then you will receive a credit on your 2020 tax return. Now, let's talk about the second round of PPP money. The Small Business Administration Payroll Protection Loan is a 1% loan that may be 100% forgivable. The legislation eliminated the requirement to pay back the EIDL grant with the first round of PPP money. And we are now able to deduct the expenses paid by the PPP forgivable loan or forgivable amount. To qualify for the second round of PPP money, you have to have a decline of 25% per quarter of gross receipts in 2020 in comparison to the same quarter in 2019. Similar to the first PPP loan, it is based on 2.5 months of payroll that was paid in 2019 for the first loan, but in for the second PPP loan, you can use either your 2019 payroll or 2020. The PPP forgivable loan is available to the self-employed who do not have any employees. The amount is based on the either 2019 or 2020 Schedule C net income. To calculate the loan, you would simply take the Schedule C net income, divide by 12, and then times by 2.5. The self-employed person would be considered one employee. Now, this is important. As with the first round of PPP money, the loan is forgiven by paying 60%, not 100%. That's how it's calculated. But by figuring the forgiveness amount, you take 60% of the loan for payroll and the other 40% for other expenses. For the first round, it was rent or mortgage interest, utilities, telephone. But with the second round, this new bill expanded other expenses with accounting fees, essential supplies, software, and cloud computer expenses were also added to the other expense category. As I mentioned, the bill will allow expenses paid with the forgiven PPP debt to be deductible for federal purposes. And the forgiven debt is not taxable. It is tax-exempt income. Now, please note, California did not conform to this federal law. So we will most likely not be allowed to write off these expenses paid by the PPP loan on the state return. I hope this helps you to understand this new legislation and the second round of PPP loans and stimulus payments. I appreciate you listening, and thank you so much.